Good morning. Today is Thursday and it's February 23rd. The time right now in Singapore is 9:30 in the morning, and overnight on Wall Street, of course, overnight we were looking forward to the FOMC minutes, which was released at 3 o'clock in this morning. And the content itself did not surprise. Most people are already expecting most Fed officials are definitely in favor of further rate hikes. And of course, after the release of the non-farm payroll, right after the FOMC meeting, which was last held on February the 1st, which is at the beginning of this month, everybody already more or less has decided that the US economy is on very firm footing. And despite the rounds of very aggressive rate hike, it has not done any visible damage to the economy. And because demand has not been utterly destroyed, because we still have a very, very tight labor market, which will lead to higher demand for goods and services, the Federal Reserve is likely to continue to hike rates for much longer, and that causes the equity market to slide off the recent range-bound trading activity. Okay, over in the Dow Jones, we can see the prices continue to trade to the downside after breaking out from the consolidation range. The bottom fell off from 33,581 on Wednesday, and of course yes on Tuesday, and then of course yesterday market continued to trade to the downside. And now based on this, based on the closing price, we are right now where we begin at the beginning of the year, because in the beginning of the year, based on closing price, we were trading just around 33,000. In fact, the lowest traded on January the 3rd was 33,044, and last night closing is 33,045. So we are one tick away from trading into the new low for the year. So this is definitely an ominous sign, meaning to say that the market may actually trade much lower going forward. Okay, so the momentum right now is favoring the downside. We will have to see how much more it will go. Okay, over in the S&P 500, it is the same idea, although the pullback so far from 4,195 on the year's high so far is a three-wave affair, but because based on the closing price, it is similar to what we saw in the Dow Jones. We are already trading on a close-to-close basis back to where we were at the beginning of this month. Okay, so this is a 1 month low. So basically we are right now in danger of unwinding the entire gain done so far for this year. So we will have to continue to monitor development going forward, and this is where we are. Of course, tonight we have at 9:30 p.m. the release of the fourth quarter 2022 GDP numbers for the United States. Of course, this is a revision. It was previously released at 2.9%. So if the estimation has no change, there's no revision to this number, then it will not be a major factor tonight. Okay, but if there is any revision either to the upside or to the downside, of course, it will cause markets to swing. Okay, so do watch out for this number to be released at 9:30 p.m. tonight. And over the Nasdaq on the relative basis, we are still firmer. We have not broken out. It is right now the lowest in February, but it has not taken out the January low so far. So on the relative basis, comparatively speaking, the Nasdaq 100 is firmer compared to either the Dow Jones or the S&P 500. So that gives us some idea that perhaps this market has some more life left in it. Okay, but by and large, if you look at the structure from the low in October last year at 10,440 to the high of 12,881, this three-way structure looks symmetrical, giving rise to the idea the market may have already peaked at 12,881 in the early part of February. And what continues going forward, if the market accelerates to the downside, it will reinforce my belief that the market has already peaked at 12,881 and is beginning the larger degree time frame bearish tone is going to reassert itself into the market, causing the market to go all the way down, perhaps even taking up the 10,440. Okay, longer term, I do believe market will come off, but it's a matter of timing. Okay, over in Hang Seng, we have not seen major reaction yet. Market has just opened this morning, and obviously it opened on the slightly weaker note, and this is a continuation of the fall that we have seen since the end of January. January 27 high was 22,700, and this market has been coming down since, and there doesn't seem to be any viable support until 19,300. So the nearest support lies somewhere like another 1,100 points away. So possibly the market may continue to drift lower. Okay. Over in the Shanghai Composite Index, we see that the market has been trying to take out the most recent high at 3,310 without much of a success. This is the high traded at the end of January. In February itself, we have one attempt here on February the 16th. Did not quite make it. It went up to as high as 3,308. And then we have a more recent one, which is traded this week itself at 3,308. Again, did not quite make it and came down. Yesterday, the market again tried to take out this high, again failed miserably, and the market actually closes slightly on a weaker note. And as of today, the Shanghai Composite Index, the chart here has not updated, but I won't be surprised that they will continue to try until otherwise. Okay, if the market decided that despite rounds and rounds of trying to break up to the upside, fail, of course, these people will started to liquidate their position, and it may cause prices to ease back. Okay, over in the Shanghai, over in the Nikkei 225, we're beginning to see the prices continue to drift lower. And right now, let me see if there's any update. No update for Nikkei so far. Okay, the market has not updated, at least not on my chart. The market traded yesterday low was 27,046. So this is about the lowest close after January 24th. So we can see that the market is basically still struggling, although the pullback so far for 27,821 is a three-wave affair. Is this possible that the market may have already finished its consolidation, getting ready to go up? I do not believe that it will be the case. Now, if you adjust we adjust this trend line here and see if the market today will continue to break new low or not. Okay, so the key point here will be this level here. This is wave one. So if the market wants to do a 5-wave rally, it must not fall below 26,547.6 because wave one must not be overlapped as far as the Elliott wave theory is concerned. So if the market continues to trade lower, and if it ever trade below 26,547.6, even by 0.01 tick, okay, that will also suffice as not as invalidation for a 5-wave rally scenario. Okay, so do watch out for this level here. Over in foreign exchange, we can see the dollar remains very well bid, and the high traded the day before on Tuesday was 135.23, remains very much in place, and you can see market is still struggling, but basically holding near the 135 levels. Currently it's trading at 134.83, and it does look like it has enough to go higher, and I think my target at 139 may actually be seen in the near future. Okay, over in the euro, with the dollar maintaining its slightly a bullish bias, we can see all the other currency has actually unraveled, and there's no surprise here. Euro dollar has gone down below 106 last night. Although it's only marginal, you can see that it's 105.99, but the market trend is very much very obvious here. The market may actually drift all the way to test the 104.80 levels. Okay, this is still my target, although I still do not have a position. However, like I say, I'm already positioned short in the Aussie, and Aussie looks like it is continuing to go to the downside. Last night it broke the 168 at 167 0.686795. Okay, so this market this morning have a bit of a rebound, but by and large you can see the market wants to go down, and my target is somewhere at 0.6630. Okay, initial target here will be within this bracket of prices. 0.66 I think I'll be good enough to take profit. Okay, over in sterling, sterling continue to edge lower, although I've already shot at the 3-wave rebound near the top here. Market does not look too weak when you compare this to the euro versus the dollar chart. You can see the sterling chart is relatively more stable, but it does look like it may actually drift lower. Target is a 118.40. Okay, over in dollar CAD remains very well bid relative to the dollar versus the yen. You can see the prices are going higher, and if market can extend higher to the 1.618 level, it does mean that the market is in not just a simple corrective rebound. It could actually be the return of the dollar after its peak out in September last year. So we can see that the dollar is starting to reassert itself, because based on market expectation, the Federal Reserve now would have no choice but to continue to hike rates for much higher, much longer. After all, the last 2 weeks we have seen very good economic numbers being released in the States, and that gives rise to the idea that the Federal Reserve have not succeeded in destroying demand, and so they have to try harder by raising interest rate even higher. Okay, so over in the crude oil, with a strong dollar, the commodity market cannot go up. Okay, this also applies to commodities like crude oil. Crude oil is trading at $73.80, the lowest traded throughout this series here. This is about the lowest it ever closed. Okay, since this month. Okay, so basically I think the market may have enough room to continue to test the lower end. Okay, unfortunately I'm already long, so I hope that my stop here below $72 is not taken out. Okay, over in gold, continue the same thing. The market pulls back rather sharply, but have not taken out the low traded this week. Last Friday at $1,817.70. But on a close-to-close basis, last night closing price is about the lowest since when? Since January the 3rd. Okay, so we are looking at near the year's low. Okay, on a close-to-close basis, I'm talking about closing price here. Then of course this is obviously going to extend much lower. Like I have this suspicion that the market may actually extend all the way down. The weakness in precious metal may actually last into either late April or early May. Okay, so we still have a good 1.5 months more to go, and there's a lot of room left for imagination as to how low gold prices can go down. But in the long term, it is a definite that we want to stay long on precious metals. And my idea is not only to trade the precious metal, I actually want to go out there and check out the physical. In fact, after this recording, I'm going out to check out a physical store here that deals in bullion. I may take some videos and I may share with you guys later on. Okay. And now this is silver market. Market here is relatively on the basis of comparison to gold. It seems to be a little bit more stable compared to the price chart that we saw in gold market. The low so far is $21.17, and unless gold dramatically pull up, maybe it will, the bearish sentiment right now may actually spill over to the silver market. By and large, I think the support lies somewhere near the $20.58. So there is still a bit of room down to go, and if we're talking about another dollar more to go. Okay. Over in crypto, we can see the crypto, based on the release of the FOMC minutes, it's definitely have a bit of a bearish tint to it, because if interest rate goes up, it's definitely a negative for risky assets, and therefore crypto prices basically fall back last night upon the release of the minutes, and there was no surprise there. But right just before the market closes in New York, we can see buyers starting to reappear. Okay, so last night low was at 23,583, so not that far away from the previous low here that was last recorded last Friday. So we are looking at a sideways bound market getting ready for another surge possibly to 27,744. So if the market here at 23,344 managed to hold out, then obviously it will attract buying interest. Okay, we can also see the same thing happening in Ethereum, although not the same thing. The market pulled back in a three-way structure from a high of $1,743.30, which was last traded last Friday, and pulls into this bracket of prices which I have earlier on identified. This area is $1,583.70 to $1,613.80. The low traded yesterday was $1,597.94. So it's right into this bracket of prices, and the market started to rally just going into the close of New York. We want to go down to the lower time frame and see if there's any reversal signal here. Apparently there isn't any very obvious reversal signal, so maybe we may see a temporary rebound. Whether it's going to be sustainable, we do not know. However, if the market take out $1,743.30, it is on the way to $1,860. Okay, so watch out for the break of this year's high. Okay, over in Cardano. Cardano also do the same thing as what Ethereum is doing. It pulls back in the three-wave corrective pattern from a high of 0.421, which was last traded last Thursday, and last night low was 0.377. Again, it is right within my bracket of prices between 0.373 to 0.383. So the market do pull out. Again, I'm sure there is no visible or conclusive or reversal signal. There isn't one, okay, except for one inside bar here. There isn't any obvious reversal pattern that we can see, okay. So if the market can sustain beyond 0.421, it is likely to head towards 0.454, okay. Over in Solana, we are seeing a little bit of a pullback also back to the 50% mark. So we can see the 50% mark has always appeared in crypto trading. Crypto trading is actually very technical. If you have some kind of technical analysis skill, you can basically use that to trade crypto market because it is very, very technically inclined. Okay, we can see market pulls back the 50% mark of this rise from this low here of $19.70, $27.12, pull back 50%. Right where the 50% is, the market rebounded. Okay, so we can see that there is demand at this kind of critical technical chart point. Okay, so you can use that to actually guide you to trade the crypto market. This is all I have for you for today. Remember, tonight at 9:30 p.m. we have the release of the fourth quarter GDP numbers for the United States. Expectation is 2.9, no difference from the previous release, or rather the previous estimate release. Okay, so do look out for this number. Unlikely to have any surprise, but if it does, then expect some kind of volatility. That's all I have for you for today, and I'll see you tomorrow. Bye-bye.